You are listening to Lender Lounge with Kevin Kim, a podcast dedicated to helping those in the private lending industry grow, improve, and streamline their business. I'm Kevin Kim, partner at Gerasi LLP, the nation's largest private lending law firm. Join me as we chat with the best and brightest in private lending, who are eager to share their years of wisdom and best practices with lenders, borrowers, brokers, investors, and more. Subscribe to Lender Lounge on your favorite podcast platform and learn more about Gerasi and how we can work with you at gerasilawfirm.com. Check out the episode summary for other valuable resources. Hey guys, welcome to another episode of Lender Lounge with Kevin Kim. We are using our new studio setup online. We are now in the swing of it for season 4, and I have two very good friends of mine as our guests for today, Greg with Arixa and Kevin with Renovo. I want you guys to introduce yourselves to our audience, and we'll get started with the topic of the day. Greg, you want to start us off?
Sure. Thanks, Kevin. We're looking forward to doing this. Kevin and I talked about this, and he knows I have mad respect for him and what he built over at Renovo. So I think this is a subject that's near and dear to our heart. So sure, we're both looking forward to sharing some thoughts on the subject. For those who don't know me, I got started on the real estate side as a developer, flipper, rental property owner. Was doing it right out of college and full time, sort of when the global financial crisis hit. Bought, sold, and flipped, 250, 300 homes over the course of a few years. And it really gave me an opportunity to work with a lot of private lenders because that's how I financed my projects. And that was sort of my entree into lending. I was able to get to see what a lot of lenders did and how they did it, what I liked, maybe what I didn't like. And since I've started running the lending platform here at Arixa about 10 years ago, I've tried to always keep in mind, some of those feelings and thoughts that I had as a borrower. And I think it's helped. I think it's helped as we've grown the business. Now Arixa, we are LA based with an Arizona office, mostly West Coast focused. We primarily make bridge renovation construction loans on single and multifamily projects, kind of from $500,000 up to as much as $20 million. Heavy focus on construction. Most of our markets are not really that active doing what I'd call a light rehab. So most of what you see here are very substantial remodels, ground up, and really big value add. And we operate everything here, much like Kevin does, in-house. We do everything from, valuations through closing, credit, all the way through construction management and draws through servicing, all within the Arixa, world. And mostly lend off of our balance sheet. We're an alternative investment management firm that has both institutions such as pensions as well as family offices and high net worth individuals that make up the majority of our LP capital. We've worked with you, Kevin, obviously, and Gerasi on some of that over the years. And again, we have full discretion over most of those vehicles to be able to operate quickly, make decisions, and take care of our borrowers. So kind of leave that the introduction. Let Kevin tell you a little bit about him and Renovo.
That was awesome. Kevin Kim, thank you for having me and Renovo. Greg, been looking forward to this for 10 years, as long as you and I have known each other.
We're finally relevant, Kevin. After 10 years, we're relevant enough to do this with Kevin. So
finally matter a little bit, maybe, kind of, sort of. And, unlike Greg, it's funny, Greg came from with a rehab background himself. I didn't. I kind of grew up my dad was a home improvement lender in the 70s, 80s, and 90s. And I actually grew up from high school making loans in the home improvement business and have been making loans my whole life. Basically grew up at the dining room table, listening to my dad talk to borrowers on the phone on Sundays, making collection calls from the dining room table, and have truthfully never really done anything else. I started kind of coming out of the financial crisis. We started Renovo, and that was 2011. The goal of starting Renovo was to create a institutional size company that was, but very customer centric, client centric, and local. We've taken a unique approach to any other maybe national lender where we're local in the markets that we operate in. We're in 15 markets today. and we're very focused in those markets. We've got people in those markets. Some of those markets, have physical offices. The intention is to have physical offices in most of those locations. The headquarters, we started in Chicago. That's still kind of our main central office, if you will. And there's about 150 Renovo employees today. We span the product suite of kind of all things residential investor. So the way we think about our product suite is both single family and multifamily, spanning from fix and flip, ground up construction, and then the stabilized products. Those like 30-year DSCR, as well as like the 5-year and 10-year more balloon products. And that's a bit about us, and excited to be here.
All right. Well, you both have been on the show before, and one of the things and reason why we're having this group interview, having this group pod today is both of your companies have been almost obsessively focused on this idea of being customer focused or customer service oriented. And I hear it all the time, right? I hear it all the time on panels and advertisements and from other folks. But I met your team and I know how you guys operate, and I've I've seen it firsthand, which is why I wanted you guys to be on the show and talk about this, because I want to get in the weeds on the idea of being customer focused and customer centric. What does it truly mean to be that way? And how do you get the team to really live by that? It's almost like a credo, right? You have to, it's not something that's easily taught, and that's not something that's easily embedded into the company. And you guys have done that. And I would like to ask you guys, how have your companies really embraced it and made it part of your day to day, the specific tactical aspects of it? So, whoever wants to go first, so that's the first question of the day.
Again, I think first, let's a compliment, Kevin. I think if I'm in the same circle of service delivery as Kevin, I take that as a compliment because I think they do a great job over there, and
So nice.
But I think it does start with with the leadership of the business. So if the leader doesn't walk that talk, and it isn't something that's talked about, communicated, shared, celebrated, it just doesn't work. So one thing that's very unusual before I go into our specifics in our industry over the last 2 or 3 years, there's been a tremendous amount of change at the C level. There's been a tremendous amount of change in the ownership groups. So I think one of the unique things about Kevin and I, good or bad, a lot older than Kevin, is that we're kind of the same people doing the same thing we've been doing since we started. We're doing it with a lot more scale, but it's not a new face or a new person or a new this. We've added to our teams, but there's a consistency I'm assuming if I was in Kevin's new hire orientation 10 years ago, I'm betting he said exactly what he's going to tell you now. I don't think he's changed, and I haven't changed either. So if you've been with the organization, and now we have employees, I'm sure Kevin does too, have been with us for 7, 8, 9 years, it's the heart and soul of our business. And the new people that come in, we spend a lot of time making sure they care about service, they love real estate, because that's what we do here every day. And we care a lot about how the other team members will respond to that person. So I wouldn't hire somebody unless they met a number of people on my team. Some candidates say, wow, I have to meet a lot of people on the director team to get a job here. Like, yeah, because you're gonna be working with all these people. We're looking to see if they fit into the team and have that sort of, service mindset that we think is so critical to our business. We compete out here in the markets that we're in. There are a tremendous number of great lenders, and every client that we work with is known to our competitors and is a desired customer for the most part of our competitors. So it's a scratching and clawing kind of business to get the kind of clients that we want to work with and keep them. And I think Kevin knows this as well. I mean, our best clients, everybody wants them. They're active, they're successful, they're respected, they do great work, they give great referrals. They're dream clients. And if you're able to deliver for those clients, it just builds a very, very sustainable and profitable business that allows you to attract and retain the great talent that allows you to support it. But we're never going to be we'll give you the most proceeds, we'll be the lowest rate. There are a lot of places that will do those things for clients. Our job is to anticipate the things that clients don't know they're going to need. And I think these last 3 years, if you could ever write a script for, I used to say clients all the time, when things are really easy, you're not going to need me. When things aren't so easy, you're really going to need me. Then COVID hit. That was an oh shit moment. And then all of a sudden, the Fed raises rates 11 times in 14 months. That was a second oh shit moment. So, you really got to test what we've been telling clients all these years, which is things are going to happen that you're not going to expect. And you're going to need somebody who can pick up the phone and understand or anticipate what you might need and then have the ability to actually do what's most important to you at the time of need. It's like it's no use having a life jacket if you're not in the deep end. But if you're in the deep end and don't have a life jacket, it doesn't end very well. So it's just having that partnership and having that relationship where you know your clients and you also know where they might get themselves into a little bit of trouble. I often have conversations with somebody that says, "Hey, I'm a little worried. You've had this thing on the market for a little while. You got a couple of things coming. How are we looking?" All of a sudden you get a little different conversation, and they're like, "Oh wow, you're really in touch with me. You know what's going on. You understand what's in my portfolio." Not a conversation I think a lot of lenders would be having with their clients. So I rambled a little bit there, but that's just a little bit about what we do.
I would say very similar to Greg, but maybe in a different twist. Is and again, let's pay attention to the fact that he called them clients versus borrowers. Okay, that's a pretty big difference. It's not one size fits all. There's a lot of different people in the world. There's a lot of different people who are doing real estate in the world, and there's a lot of different needs that they each have. I think for us, it was important when we started the company to decide what kind of borrowers did we want to have as clients that we can get up every day and work hard for.
Can you expound on that difference, that client versus borrower? I'd like you to give me how you define the difference, because it sounds like it's a very big difference for Renovo.
I mean, look, we haven't spent tons of time defining it with exact words, but I would say a borrower is pretty transactional. And I would say a client is more of a relationship, which obviously needs to have transactions. But at the end of the day, hopefully, the relationship is more than just the transaction, right? Like Greg said, like there's good times, there's bad times. You have to earn, what we believe is we have to earn that right, by the way, with that client. We have to earn it every single day, and we have to stack chips, hopefully in the right direction with our clients, that we woke up in the morning, we did what we said we were going to do, we listened to what they needed, and we performed. And you got to perform 10 times, 20 times to start to build trust. Because there's going to be a couple times where we mess up. No matter how much we focus, no matter how much we care, it's going to happen. And there's not an exact science to it, but we better be stacking up lots of good execution with that client for that one time we mess up. Because at the end of the day, look, what matters for them is that they're getting their project done, that they're meeting their own business goals. We don't matter. And I don't mean that negatively, but like at the end of the day, like they're waking up in the morning trying to do their thing. And we got to wake up in the morning and do our best we possibly can to perform for them. And sometimes no is an acceptable answer, by the way. Like I think some people get confused, and customer service means you say yes to everything. We don't think that's what it means. We think it does mean, though, do our absolute best to do what we say we're going to do. Be reliable, be predictable, be quick, and be friendly.
Yeah, I was gonna say be kind. Be
And
kind.
be kind. Be kind and be friendly, right? I mean, you don't have to be a jerk. Life is long, or business. Hopefully, all of us are in this for a very long time, and we still have. So it's funny. I'm not sitting in my office right now because I didn't have good acoustics for this podcast. But in my office, I've got a huge picture on my wall of the first project we ever financed. It was a little single family house in suburban Chicago. First loan we ever made. Huge poster on my wall. And I'm so proud to say 11 years later, 8,000 loans later, that borrower is still a borrower. That client is still using us.
might be paying the same rates now that he paid 10 years ago too. It's come full circle. So
Well, and at the end of the day, what we do, look, we want to be competitive. So we're in the markets, we're competitive on price, we're competitive on advance rate. But if that's all that matters to you as a borrower, probably not a really good fit. And we do spend a lot of time up front. We spend a lot of time up front getting to know our clients. And if a client is not willing to spend 30 to 60 minutes with us up front, typically in person, by the way, if they're not willing to do it and they say, no, just tell me your rates. I can't, I don't know what's my rates. We've got a lot of different products. We have different advance rates. We got a lot of different stuff. It's like walking to a clothing store. It says, how much are your clothes? I don't know. Like, what are you looking for? Socks, a t-shirt? Hold on a second. What are we trying to do? So we do try to slow down, get to know the client. We take really detailed notes in those meetings. And it's not uncommon that we'll be in a credit committee meeting reviewing a seventh loan for a client. And we'll say, pull up the notes from the first meeting. Let's get a sense, like, who is this borrower again? We're about to have a big exposure here. Like, can we think of, so we really do care about, we want to understand the story and the fit for us.
we're the same way, Kevin. It's really important. A lot of conversations you have with clients are like, you would be a great client or borrower, just not a great client or borrower for Arixa for whatever reasons. And happy to give you the many lenders that would be a better fit. But just our loans are a little bit bigger. Our average loans are, $2.5 to $3 million. And we're trying to build that relationship. So we don't just want to do one transaction. So we have to find, it's almost a little bit like that first date. There has to be things in common that are important to you and are important to us that we want to do this again. So, we care, we do a lot of construction. So, we do very well with owner builders, people who actually, they're on site every day and they care about how the construction draws happen. And they know the difference between what it costs for this faucet or, that nail. They like us a lot because we understand the construction process incredibly deeply. Our team does. So they can have a conversation. They don't have to explain, hey, I'm spending X thousands of dollars for this or that. We'll understand why they're doing it in the market that they're in. They don't want to have to teach somebody over the phone. I mean, I spend the whole podcast talking about construction draws and how hard it is for a builder to actually get somebody to understand a budget or a change order or what they're doing. But if people care about these things, we can work with you. We can be a great service provider and we can give you things that are important to you. If it's just rate, if it's just maximum proceeds, there are definitely better fits for you than what we would be.
Right. And what's been weird over the years, especially since I would say like 2018, over the years, what I've noticed is a lot of people say this. They say that they're focused on this, but at the same time, they're also focusing incredibly on what I would call commoditization of private lending, where each loan is effectively a widget. And you see this a lot with lenders that are relying on the bond market, right? I mean, especially the way very institutionalized organizations, you see a lot of this commoditization. And to me, from my perspective, it seems to be a logical progression of a growth of a private lending business. And I would argue that it makes sense because now you have an institutional backer or you're owned by an institution. They're very much bottom line oriented, productivity oriented. They couldn't care less. There's one piece of their big puzzle, right? And that's the question I want to kind of pose to you guys next is, does this customer focused type of operation in financial services, we're a financial services business, we're a mortgage business as well. Is it possible to continue this as you get going to scale and as you start scaling up and getting to that place where everyone wants to go is kind of competing at the national level, truly an institutional outfit? Is it possible?
What do we say, Kevin? That 1 billion is now 3 and 3 is now 5. What's the new number
It
right now?
seems like it, right? I mean, that's also the interesting. I would never have imagined that a private lender even hits $1 billion in origination. And now there are several of you guys in the B club, right? And the several B club. And so, and by the way, kudos to both of you guys for hitting those numbers. But like the fact that we've grown so much is also really cool. But there's so many companies now that are institutional in nature, and it feels like everyone's headed toward that commoditization, and you see the same thing in non-QM, right? And so I wanted to ask you guys, what do you guys think about that? Because you're both keeping things very retail, customer focused, and you're both scaling. You're working with institutional investors. Is it a pipe dream to be able to hold on to this as you scale up continuously? I don't know.
Okay, it depends a lot on your capital. So, I mean, I think if you're doing things that have to be in a securitization, your capital is dictating your product. I mean, what we've tried to do, and again, there may be limits to the scale of this, but if you're, we think of our business with, as you know, I've told you, you have two hats. We're an alternative investment management firm that needs to produce great risk reward for our investors. That lets us curate investments. So it can be a very unique investment. It can be an investment where we can cross collateralize something. It can be an investment where we do some things that would not fit in somebody else's box, and we can make that work because we're just generating yield. If I've got $1 billion on my balance sheet, I'm trying to generate 90 or $100 million a year of interest income, whatever that number might be. And I don't have to do it in one particular way. I just have to continue to do it. So now there's going to be limits to that scale, but I think if your capital doesn't force you to it, you can be very, very creative about how you productize and what you do. Like, Kevin made a comment, like, if somebody asked me to send them a rate sheet, I can't even do anything with it. I don't have a rate sheet. We custom price and custom structure every loan. And either, my partner or myself are involved in the structuring because there's so many factors that go into what we price and how we price and what we structure and what our attachment is. You know, we don't have to do a 12-month term. If eight's your lucky number, you could have an 8-month term, knock yourself out. Like, it doesn't matter to me. It doesn't matter, what somebody needs as long as we can make it work. So that's been our strength. I often play the Wall Street versus Main Street card just because, we're independently owned by just my partner and I. So when we're competing against, what were the Goldman Sachs of the world or the Blackstones of the world, and those are fine financial institutions, but you're pretty far removed from where the leadership and decision making is. And if you don't realize that, just look at an org chart, because the person you're dealing with, boss's boss, is not on those websites. So, in Kevin and I's world, if something's important enough and a borrower needs to get Kevin on the phone, Kevin's going to be there for him. I know he will. I'm the same way. And I just think that's part of what I think both of our secret sauces have been, is that, and Kevin's got more institutional backing than we do, but I think he's been able to keep, just the way he can still deal with clients and be present, I think is a really differentiator versus all my loans go into a security. I'm sorry, I don't service them anymore. I'm sorry, I can't help you. Sorry. Eventually you use those chips up, Kevin. After so many sorries, those chips aren't worth much anymore.
Problem we're facing today, right? A level of disconnection as to the borrower relationship and the customer focused orientation.
The disintermediation, Kevin, is really, really accelerated.
Well, yeah, exactly, right. But I mean, Kevin,
It's funny. So for us, there's a video on our website. I think it's still on our website, of a client interview that we did probably 8 years ago. A woman named Leslie Marquardt. And it's funny, I didn't know who she was. Okay. It's a woman who did business with us. She was a builder in Chicago, and she was building homes in Chicago. And one of our marketing team members went and did a video with her and videoed her about her experience with Renovo. Eric Workman is the guy that did it on the Renovo team. Eric walked into my office with this video on an iPad and said, "You need to sit down and watch this video." And he sat down and he played this video. And within 3 minutes, I was crying listening to her talk, for a couple of reasons. Number one is because I had no idea that she was a very successful corporate consultant that consulted on customer service for the biggest companies in the world. We had no idea that's what she did as a full-time job. And she went on and on and on in this video about how Renovo met or exceeded all of her prescribed customer service experiences that she teaches her big clients to go do. And I got teary eyed because I'm like, oh my God. And at the time, 8 years ago, we're still pretty small. And the reason I tell that story is really for two things. One is I met with Leslie after that. And Leslie said, Kevin, it's not that, first of all, don't forget, it's not that you don't have rules to follow. You're going to get bigger. You're going to have rules to follow. You're a lending business, for God's sake, right? You got to have rules, but there's an art and a science that your clients cannot feel these rules on a regular basis. Okay. And that's much harder said than done. We work tirelessly to set the right expectations for borrowers. Because when you say the thing about not fitting a box, first of all, borrowers don't know their boxes or
Well, they don't care.
care about your boxes and your whatever the hell else you're talking about. They're like, hey, do you understand my business plan? And what are you doing for me? What can you do for me? If your LTVs are going to change, or your pricing is going to go up, or your LTCs are going to come down, or your interest reserves are going to change, it's all about getting in front of that borrower and explaining that you have a change. It's actually a cop-out, a real big cop-out to blame Wall Street, in my opinion, to be honest. It's actually bad management and execution of a company. You got to figure out a way to deliver these things called loans in a way that the borrower wants to receive them.
And manage expectations that you cannot. I think that seems to be the problem, right?
Once you lose that loan, what can you manage? That's the issue that I've always had.
Well, my problem has always been, I mean, both the aggregation aspect of the business, right? The aggregators and the institutional loan buyers, but also some of the lenders that are national, they're misrepresenting to the market that they're still lending when they're not, or they're still buying when they're not.
Well, and they have advance rates on their websites that are higher than they actually do.
Pricing that's, it's the teaser rate.
Pricing that's not lower. How many firms are issuing term sheets automatic without even looking at it? To everyone do it their own way. But Kevin, I will say for us, it's been a constant effort and art and science to remain local feel, direct borrower relationships, and marry that with institutional Wall Street money that does want things in boxes, right? Because to access large sums of money at competitive prices, you can't tell, your investors, oh, don't worry about it. We're just going to, we're going to hug each borrower and then everything's going to be fine.
Right. So you're saying that it's an expectation management component, and more, if anything, you're having to double down on customer service.
You have to manage expectations with your capital too. I think, Kevin. Like they need
both sides.
Yeah, you got to do both sides. Yeah,
you got to manage both sides well, and you got to be transparent, and you have to tell a borrower sometimes, hey, you know what? Just to be clear, what you're asking for here is a little bit of a special request. Do me a favor. If you want me to pursue this, do you have your seatbelt on? What do you mean, my seatbelt? It's going to be bumpy. Are you okay with that? Yeah. It's all about setting expectations with a borrower. If you tell the borrower, oh, no problem, I got you, man, no problem. You want 90 LTC? I got you, no problem. And then you don't call the borrower back. You wait a week and a half and you send them an email that says, oh, sorry, my underwriter said this. And they blame Wall Street. Oh, it's Wall Street. Wall Street, in some ways, honestly, in my opinion, is one of the greatest things that's happened to our industry, because we are getting so much money pointed at this industry now. I just hope we don't mess it up.
Interesting point, and I want to kind of dig into that a little bit, because recently, right now, it's August 1st, 2023. Within the past year or so, we've had a lot of ups and downs, a lot of volatility, a lot of heartburn, a lot of headache.
not in rates, Kevin. It's just straight up to the right. Not
Oh,
in
I
rates.
know. But there's been a lot of ups and downs as it pertains to borrower volume and market conditions, and we had some months that are good, some months that are bad, a lot of ups and downs. Very tough time for a lot of your institutional counterparties and also the national institutionally backed lenders. But as someone who's been watching Renovo very closely for a very long time, and I have the benefit to also being one of your attorneys, we see continuous ability to weather the storm, if not grow through the storm. And one of the, and I've asked you privately about this, and I kind of want, and feel free to kind of couch it as you need to. But at the same time, other companies that have also been associated with the various institutions that you're associated with don't seem to be able to, have not been able to weather the storm and are no longer around, right? And some of them have been able to have had to either sell off or shut down, or now have actually gone defunct. Is it purely this whole transparency and customer management aspect?
Kevin also makes really good loans. That's one thing.
Well,
that
that's gotta be
helps.
it, right? But I mean, no, they got the borrower to come back to the table, and you're making loans happen. So
We always say this: it's 1,000 details. There's not one. There's no one thing. There's no secret sauce. I mean, honestly, it's 1,000 details. We have a team that's waking up every morning, and everyone's got teams waking up every morning. Our team is really well aligned. We have a steady management team that now has been on the team some as much as 10 years. And we got the same people doing the same thing. And we try to learn, every month, every quarter along the way. We don't lend in every market. We lend in the 15 to 20 markets that we spend a lot of time thinking about. So we think we know a little bit more about those markets, and we care about those markets, and we're thinking about them. Portfolio performance is critical at Renovo. We do monthly calls where a lot of us are getting on the meeting, and we're going through our portfolio up and down. Renovo today has 3,500 open loans, and we still have a monthly call, and we go through a lot. I mean, we can't go through 3,500, but we go through chunks of our portfolio, and we think about what's our extensions, how are extensions working, we're in the weeds as a specialty mortgage lender to really understand what's working and what's not working.
but no one's ever had to tell you pump the brakes, right? Like ever until now, for now.
What do you mean by that? What do you mean?
Well, there have been at least rumors that have been at the institutional level that have been basically says you're cut off. We're no longer other groups, right? You're cut off. We're not buying any more of your loans. We're not funding any more of your loans. Just not happening anymore unless you conform to this impossible measure, right? And that's what I call pump the brakes.
We've been lucky enough that, that hasn't really been a thing for us. We've got a combination of capital. We keep some capital on our balance sheet that we can fund loans. So our balance sheet, we run what we call a hybrid model. So we've got our own balance sheet, our own credit facilities. We just issued some rated corporate debt last year for the first time. I think only a couple other people in the space have done that. So that's totally Renovo controlled capital. And then we have a couple of relationships that really matter to us that we fund loans with, that we stay very close. And look, everyone stays close to their capital providers. I can't stress enough that you gotta stay on the same page, and you have to make good loans every single day. We're a lending business. A lot of the people at Renovo came from either a bank or a specialty finance company that for the first 8 years we existed, every loan we made, we held to maturity. In the beginning of Renovo, in order to make payroll, we had to go get extension fees from borrowers in cash. So we can make payroll. So getting loans to perform and getting borrowers to pay off and not hate you for it is, again, 1,000 details. Now, look, some of the things that happen in the industry are not the fault of the platform. Who would have thought that being owned by a bank would come to bite you in the butt?
Greg and I have had many conversations.
Well, I might have thought that too, but look, honestly, but look, you never know. And we're all vulnerable. Every one of us is vulnerable.
And also, there's no way to know. With banks, it could have been a million different reasons. You never really know why, because with banks, there's so many different rules and regulations. It's hard to tell. And my father was in banking for 40 years, and he laughed about it when it happened. And then I talked to him about it when it shut down. He's like, hey, they lasted a while. So, his prediction, his view of it was that shouldn't last for more than 6 months.
I think they made it 25 months. I don't know. That's pretty short in our world.
It's pretty long to him. His perspective on it was the regulator would shut it down within less than a year. So,
and it looks, a lot of people have started these businesses and sold them, and the founders are out,
and they're doing their own thing now.
And they're doing something else.
And I think that's part of the space. So there's a lot of evolution to it, right? And there's a lot of you have to kind of go through it to figure it out.
Greg and I have a sick addiction to working and making loans. It's a sickness. Actually, maybe you can help us get some help on it.
You're talking to the guy who comes to the office every day. One of the only partners that come to the office every day. So I have the same sickness.
We both take tremendous pride. Kevin's at 8,000 loans. I think we're at like 2,500 loans. I can tell you the 8 loans that went sideways. Like at the end of 2022, we had the entire portfolio. There wasn't a single loan in our entire portfolio. It's changed a little bit since then that was late out of payment. We went on a mad crusade at the end of the year. I'm like, because we only had a few at the end of 21. I'm like, you know what? Let's see if we can get every single loan in our portfolio over $1 billion to be current as of the year end. And we hustle. And it's maybe a silly thing, what's the matter? They pay January 5th, December 31st, whatever it is. But it was a concerted effort. And we may never do it again for as long as I'm in the business, but it was pretty freaking cool that every single loan that you had made their current interest payment as of the end of the year. And we care a lot about the performance because, again, our investors aren't saying, you know what, push your leverage, get an extra 100 basis points. I'm running a several $100 million portfolio. That 1 or 2 or 3 loans, we don't get paid enough for loans to go sideways. We're not in the loan business. We're not in the let's collect the default interest. Ha ha ha. That's not the business. We're in the business of running good loans every day.
It's in everyone's best interest. It doesn't have to be we versus them. It doesn't have to be the borrowers versus the investors. If you think about it, it's stakeholders. Think about the stakeholders involved. The capital providers, which I don't care if you have a balance sheet or you're selling your loans, right, Greg? You have investors.
We all want performance.
Doesn't matter. It's somebody's money, and you got to treat that money with the utmost integrity, respect, thought, and you got your staff to worry about. And then you got borrowers. Like I learned a long time ago in the specialty finance business and the home improvement business, if a borrower goes 30 days late, they're usually not coming back. Like they're pretty much done. So at Renovo, if a loan goes 1 day late, emails go out to the whole staff, 150 people. Hey, these borrowers ACHs haven't gone through, and you'll see emails flying, people running around. It's a little chaotic, but it really helps. And the reason we're trying to do it is let the borrowers know. If you let the borrower know you care about that payment, you will all of a sudden be on the list of companies that get paid.
Right. But that level of radical transparency is insane. I mean, I've never heard of a company that will spread that across the entire organization, right?
We do it too.
That's crazy. I mean, like your accounting department, of course.
No. Everybody from origination.
Your marketing team as well. I mean, that's just kind of like.
Yes. Because you know why? Here's why. What if our marketing team is doing a video conference call with a borrower who's 60 days late? That's weird.
The marketers are doing fine. Hey, I got a marketing video going. I'm like in great standing here.
Like, no, you're not doing a marketing video. You get off the marketing video today.
That's true. I mean, and this kind of goes to the next question I want to ask you guys is hiring for this industry is not easy, right? The lack of, I guess, resources from a hiring standpoint in this industry, and the fact that like the same person, the same exec or a loan officer can bounce between shops because there's so few people who know this space, right? I literally met one recruiter who knows this space, nobody else, right? And this is a multi-trillion-dollar industry now, right? So how do you guys find the people that you found, and how do you look? What do you look for? Like, is there an X factor that you guys are looking for?
Kevin, you have a 6'7" secret weapon. That's part of what you guys said.
That's true. You do.
Wait, who?
You've got a 6'7" special weapon.
Yeah, he just walked by my office a minute ago. He just walked by and waved to me a minute ago. Yeah, that is true.
The giant.
That is true.
The giant Gaskin.
I mean, Kevin, I think one thing I will say is I think both Kevin's organization and my organization, we've both benefited, I think, from reputationally being a pretty good place to work. If I look at my management team, I've got an ex-CFO of a competitor that an ex-COO of a competitor, had a closing of a competitor, had a construction from a competitor. I've got probably, a third of my staff were highly successful at wedding organizations that I thought had some special things that they did. I'm assuming, Kevin, you have a lot of people that were at other shops that you thought had the same quality and the same DNA that you wanted in your team. But we also, Kevin, have a lot of people that come to us. Originators are really hard to hire because I've never found an originator who came out of conventional or non-QM who's ever made it at a rickshaw. They couldn't sell without a rate sheet. They couldn't sell without a box. So I think our world, we don't have a lot of originators. I mean, we expect our originators to do, $100+ million a year. That's kind of the minimum. We have a lot that do 200, $300 billion. They've got to be incredibly talented and be able to hold their own with the kind of borrowers we work with. Like, you have to go on a job site and actually have the presence and enough knowledge and experience. You can't be like, hold on just a second, I need to call Greg, or hey, I need to call this person, or I don't know, or like, you got to be able to have people that can stand. I know Kevin's team has a lot of these people too. You got to be able to stand on site with a client and have the gravitas to actually, I want to work with you, Kevin, because you get me, you understand me, you know my market. I think that's part of it. And then finding people, that just buy into what you're trying to do. They've just got to accept they're going to be asked to do a lot of wacky, crazy things for the benefit of your clients. I always try to explain the why. Here's one thing I do. Kevin, I don't know if you do this. Like, when I ask somebody to do I'm sure you had a day like this yesterday. We had a crazy day yesterday. I mean, in Kevin's world, it's probably like a slow day, but for us, it was like a crazy funding day. We were funding till the last minute. The wire cut off. We were running around. Like, the texts were starting at 6 a.m. But everybody knew going into Friday that Monday was going to be bat crazy. And everybody was aligned. The closers were aligned. We were running around, and but they all knew it was coming. They knew why we were doing it. They knew we had a number of hard closes that needed to close by yesterday. We had an issue where, one of the docs wasn't correct. This never happens. We had to basically redraw docs, have the notary go out, meet somebody, and it just kind of craziness when you really look at it. But everyone knew why. They understood the reason why you're doing it, and they felt good about it because guess what we did at the end of the day yesterday? Everybody got an attaboy. Everybody got a high five. I bought a few people dinner last night and said, thank you for the effort, and let's go do it again. It's not just go do it. We don't just give orders saying, Kevin, go do this. It's like, Kevin, this is really important for this client, and you get it. You buy into the why. The why is so important, not the what.
That was perfect. That was really, Greg, that was really, really perfect.
I mean, but Kevin, you've also picked up some interesting talent internally in the space. I don't actually know about some of the people that we've interacted with that aren't from the space, right? So I know maybe you, but like, for example, your chief operations officer, I don't know where he comes from, right? Like, and how do you pick these people? Because you're also in a market that hasn't been very well known in the industry, right? Like, the Midwest has been left alone for a very long time, and you guys are the biggest shop in the Midwestern market. But still, like, great national presence now. You built it and scaled it, but hiring for private lending must have been real tough because you're in Chicago.
Yeah, I mean, everyone pities Chicago, so that's a good thing for our real estate market in some
Maybe
ways.
I'm flawed for this, right? I'm biased. I'm on the West Coast,
I'm teasing you. So, first of all, Chicago is an amazing place to find talent. It's a huge city. It's an affordable city, and you have a lot of talent that comes from big Midwestern schools that ends up coming to Chicago. So, first of all, Chicago is an amazing place for talent. You're right. Most of our team, I'm going to say, I don't know the percentage, but like the majority of our team is not from the industry. The majority of our team grew up, in essence, at Renovo. The plus and minus is, like, they don't know anything else. Like, everyone who's kind of started here started from the ground up and learned the way we do things. Now, you said about the chief operating officer. So you're talking about Ramey, who I have his belt behind me. This is his customer service belt that I use on the podcast that I did for you. So I thought it was appropriate to have it sitting back here.
It's gotten upgraded, by the way. That's nice.
Little upgrade to it. So look, Ramey was a branch manager at the bank by my house, and I used to go to the PNC Bank, and I never saw someone who was so talented executing and running the branch and doing amazing things I was a customer of the bank, and he would do amazing things for me. I was nobody. I was just a guy, person at the bank, and they would always exceed expectations. So I'll say, look, what we're always working on. So that's when that's where we found Ramey. And I said to Ramey, hey, what do I got to do to get you out of here? I would love if you join Renovo. And at the time, we had like 7 employees.
So you saw him in action as a customer then, right?
Yes.
If that was our hiring criteria, we'd be very limited, I think, in our world.
It's hard. It's like, yeah.
Look, it depends. It becomes what when you buy a car or you get a shirt, all of a sudden you see them everywhere.
Yeah.
When you start paying attention to special people that are doing special things, and you say, hey, amazing what you're doing here. Can I talk to you for a minute? Can I buy a cup of coffee? Tell me your story. What are you doing? You'll be surprised. I spend at least 50% of my time recruiting. At least. I will tell you, I am on a number of first calls that we have with people at Renovo. First calls, not second. And the people on the phone are like, why are you on this call? I'm like, I saw your resume. I thought you're pretty important. And they said, well, you've never met the CEO at our company. I said, I don't know what they're doing. They're golfing all day or they're doing something. But, so I will tell you that we as a leadership team and me personally spend about 50% of my time recruiting.
Is there anything particular that like screams to you when you see that resume? Because it sounds like no matter what the position is at the firm, even if you're in HR, customer service, customer obsession is part of how they have to operate. So if that's the case, it's so hard to figure out that X factor. Like for me, for a long time, I was like, have you ever worked retail? Because I worked retail. I waited tables, right?
Yeah. Well, look, first of all, I don't want to be naive and we're not naive, and I don't want to make it seem like we're not grounded in reality. We have a number of full-time people here at Renovo that are recruiting and that are talking to candidates and that are taking in resumes and that are having conversations. And we're always trying to look for great people. Now, certain positions at the company obviously require expertise. Not going to walk into a donut shop and say, hey, you got a great personality. Want to come be an accountant? Right. So, they have to have relevant experience. But we are looking for nice people. And I don't want to sound cheesy when I say that, but it really matters. Like, we can't have jerks working here.
Or with who they like. It's very true.
Yeah. Now, we do a couple of different online assessments that we've always used that we think are really helpful for us to see what people's values are. And that does matter. You can really see, do they value the same things the company values? Because sometimes people will apply and you look at their values and you're like, wow, similar to a borrower who's not going to really value customer service or relationships, if they're just transactional, they might be better off working someplace else.
We think a lot about internal service. I think you probably do too, Kevin. Like just some people, like our accounting staff doesn't work with clients, but they work with a lot of other people internally. So if you're working in an internal function, like we care a lot about, I'm sure you guys have it too, Kevin. We have a tremendous interdepartmental dependency. It doesn't work. There's 6 or 7 different departments that might be working on something at the same time. And their ability to service their internal clients is the only way you do your external clients. I don't have as good a story as Kevin, but I had a young lady who, when I was a borrower and she was at the lending platform, she used to have to get me to sign my extensions and deal with me. That wasn't very easy to deal with, I'll be honest. And she did it with grace and with class. And she was very, very persuasive without me ever feeling like she was being pushy. She's now my director of client services. So similar to Kevin's story, we took her away from the platform she was working, and she's now working with most of my VIP clients and a lot of my people, and doing exactly what she did with me, with them. I always said to her, if you can put up with me as a client, you can put up with almost anybody. So, but that internal client is really important too. You can't just be externally facing. You got to have that service focus. I don't know if you guys do this, Kevin. We also do like a lot of 360 stuff internally where, how is it to work with these different people, people that you have a node to within the organization. It's just as important as how your direct supervisor or boss. You could be a great employee for a particular department head, but if you're not a good employee for the interactions you have with other departments, you're probably not going to go very far here.
And it's funny what Greg is hitting on, right? Is what's coming to my mind right now is we all went from little lending companies with a few people, and now we're getting a bunch of us are getting bigger and bigger and bigger and bigger, and we're having to learn how to run a real business, right? Like with real teams and real staff and real problems, and there's challenges, right? There's a lot of challenges. But we're all having to learn now. Making loans is just one thing. Yes, it's what we do, but all of us now are running businesses and we got to learn how to recruit, how to keep people on our teams, how to deal with compensation, how to HR.
Yeah.
You guys are in California. It's a
It's easy here. It's easier here, Kevin. They will let you do whatever you want.
Walk in the park. You do whatever you want. Do whatever you want.
No rules at all out here.
But it's an interesting point I want to kind of get deeper on is because the employee factor, right? In our space, in the past year, there's been a lot of people being let go, people leaving, setting up their own shop, jumping around, and it's easy right now. These times are tough. How do you keep your team members, your employees, especially your employees? Let's kind of put your execs to the side real quick, your core team, your manager team. Look at your employees, right? The guys who joined you, who are growing in the company. How do you keep them engaged? Because it's tough out there, right? And it's also, I'm sure, very tempting out there too. Because I've heard this a lot from a lot of clients who are former loan officers. XYZ dangles a carrot in front of them, they try to go build their own shop. It's been done before. So, how do you keep your people sticky and keep them in kind of marching the flag on behalf of the company?
Great coffee and snacks only go so far, unfortunately. But look,
that's what I've been saying for years. We've got snacks in the office. I don't think it does much, honestly.
I don't know if Kevin shares this view. I think you've got to be in the kind of place where people go home and they tell their significant other or their parents, I work at this company, and they're proud of it. Like it's if you can create an organization like that, people really feel like they're doing good work and they're making a real contribution in whatever area they are, and they're proud of who they work for and how their business operates. I think even maybe more in the younger generation than people, my age, it really matters. Like they want to be able to tell people, I work for this company, and my job doesn't suck. My company is actually a good place to work, and they respect me and they treat me well. I'm doing good work. I think you got to create challenges and you got to create opportunities where your most talented people really feel that they can fly. I think that's one of the things I've worked. I've managed some pretty large companies in the past, and I think one of the challenges is it's pretty easy when you're growing really fast. Opportunities. It's kind of like a battlefield promotion. I have a military background. Look, if the people are falling down in front of you, suddenly you're a colonel, right? It's pretty easy. You're getting battlefield promotions in a high growth environment. We weren't high growth in the middle of 2020. We were pretty COVID scared ourselves. The pandemic, kind of, definitely made us have a lot of second thoughts about things. It's how do you keep the people together and keep the team together if everything is not just running perfectly. And I think that's the test. And we do a lot of communication. We do a lot of call them town halls or Zoom halls or whatever it is. We share a lot of things. We share a lot of the why, share a lot of the what. I've had a lot of executives and people that are like, I'll call them middle management, who's like, gosh, I didn't know any of these things at my old company. Like, they didn't tell me anything. Like, I didn't know if we made money, lost money, added clients, lost clients, doing well, not doing well. I was just out there doing my job. Like, you guys tell us all this stuff. And I know, Kevin, I think you do a lot of this too. It's like, we want you to know what's going on at the place that you work because you're part of what it is we're doing over here. So I think a lot of that is just engagement I'm sure, Kevin does, we're trying to bring the group together. Kevin, I think he does more fun things than we do. I've seen some of your pictures, Kevin, but it's like, you want people to feel that there's a real camaraderie. People use the word family, maybe a little hokey, but you want people to feel it's a place where it's a safe zone and it's not, you know, you can have high expectations without making the place, I've worked in places where the high expectations turn it into just an unpleasant place. I think law firms are known for that, Kevin. Your first couple of years in law school, right? I got a great job, except that I actually hate going to work, and I don't really enjoy the people I'm working with or the work that I'm doing.
Well, yeah,
And
that's why we've been so obsessed about this unfirm concept at Jurassic, right? We put it on our sweaters recently. It's part of our core values. Like, we've been obsessed about this. I just gave him one of my businesses. I'll get you one, Kevin. But it's really interesting. Like, we don't want to be that law firm, right? And so, but you're also a law firm, so you have to be, a decent lawyer. You know what I mean? So it's kind of a
but,
hard thing to.
but I think Kevin and I, we don't, we want to be a lender, but we don't want to be that lender. I mean, I think it's the same. We think we can do great loans and make great credit decisions, but not be like every other lender. I think we would both probably say that. I don't have as cool of swag as you do, Kevin. I need to talk to your marketing team, but we want to be an uncommon lender. We don't want to be a common lender.
Yeah, I think, in terms of keeping people, it's just like obsessing over borrowers. In some ways you got to be thinking about obsessing over your team. And it gets harder and harder as you kind of get more and more people. So, I'll give you just a few quick little things that we've been doing to try to keep a tight knit team. First of all, we've been doing team retreats. And we do this now a couple times a year where we'll take a department, like, for example, the closing department. At Renovo, the closing department is, call it 15 to 20 people. And we'll rent out. There's in Michigan, about an hour from Chicago, there's a really cool inn that we'll rent out the whole inn. We'll curate it with some Chicago chefs, and we'll do a closer retreat for a couple days. And a lot of the management team will go. I've been to most of them. And we're going to spend a couple of days with our team talking about what's working, what's not working, and more importantly, have fun together and spend time. Because what we're all trying to learn how to do right now is operate in a hybrid work environment.
And you have people all over the country.
Well, yeah, we've got 150 people. So say about 75 are in Chicago and about 75 are spread out in other markets. But if you'll see behind me, we've got one of the things we've been trying to do for the last few years, this way, is get ourselves onto the lists of best companies to work for. And I never knew how hard that is. It's really hard to get on these lists. You've got to have surveys done with your team. You got to have a high response rate, and you got to get a certain score. And it's not easy to do. But the benefit is when you do these things, you get the raw survey back. Now, it doesn't name which employee filled out what, but it gives you can know, well, this department is feeling this way, and these departments are feeling this way, and this is the thing people are liking. These are the things people are not liking, and you get really good feedback. So first of all, we recently this is our second year in a row being a top workplace for Chicago Tribune, which is an important one for us being headquartered in Chicago.
You also won the Inc.com best workplace, didn't you, this year in 2023? Congratulations, man. That's not. I know about that. That's not easy to win.
Thank you.
Very impressive.
It's really hard. And I'll tell you, when we started the company, our whole goal, we thought Quicken Loans was always on the Forbes list, and we always wanted to be on that list. So we're not there yet. We got some work to do. We want to be. But I'll tell you what's interesting. One of the key findings I'll share with you guys: the group of people that felt the most disconnected in this most recent survey were those people that were working remotely. Now, you would say, of course, but those are also the same people who are reluctant to come into the office. A number of them work in Chicago. Some of them work within a mile of our office and have never been here. So you say, well, wait a second, you feel disconnected. This is
I've been struggling with this issue for 2 years.
It's a whole new thing that companies have to figure out. How are we going to do that? How are we going to figure this out? So we're trying these group retreats. They're going really well so far. we're doing something in August where we rented a Chicago Cubs rooftop party where we're having our whole team come in on August 15th and fly into Chicago, about 150 people going on a rooftop.
Are we invited, Kevin? Can we go do that? That'd be fun.
I'm sending you the link right now. I would love to have you there. But what we're trying to do is find reasons to get people together because, it just isn't what it was where people are all in the office. I mean, at least for us, because we also have team members spread around. So we got to find ways to get people together to create the camaraderie.
Yeah, because we're on the West Coast. We got guys on the East Coast. Like you guys all know Tom Haida. He's in Florida, right? One of our marketing people is in Florida as well. We got Matt Gunter in Connecticut. We got guys all over the country. And so trying to figure out a way, we use the conferences as kind of one of the ways to get them here and hang out before all that and do a lot of like bonding that way. But even the ones that are local, right? The ones that are local, like our challenge has always been like, we can buy as many lunches as you want, but you're just not coming. You're just gonna come in for lunch, right? That's been my challenge, at least. I don't know. It's hard. It's hard to.
Hope no one gets mad at me saying this. I was in New York a few weeks ago, just talking to kind of big institutions out there. I'm not going to say the firm's name, but it's one of the biggest asset managers. They are 100% required 5 days a week.
Yeah.
No gray area.
Yeah. It's going away. The hybrid thing is going away at the institutional level.
I'm not saying, just acknowledging that, there's some parts of the country that are requiring it. There's no gray area.
Well, I wouldn't be surprised if that changed we went back to it.
Kevin, one of the things that we did, because you've given me some great ideas on surveying, we do quarterly surveys with all of our employees. Snap 5 questions. We take that, again, by department, anonymize it, and that sort of gives us a pulse, a trend
I like
of how people are feeling.
So do you guys design it, or is it something off the
It's
shelf?
an online thing if your team wants to get it from my HR person, but it's a good way to you can see like, our originations we were flying last year. We came down a little bit. There are some very direct correlations to how people felt. Now things were going back up again, but it gives you some interesting departmental trends that are pretty, it's a 2-minute survey. It's like 5 questions.
Oh, yeah, I'll follow up with you on that. I'd love to get that.
And we're running out of time, but one of the last topics I want to bring up is, I guess also from your guys' standpoint as the leaders in the organization, how much energy and resources do you individually spend on these aspects, on the culture and on having these folks get really engaged, right? How much do you individually spend on that part of the business? Because I feel like I don't as much as I should.
A lot of time. I mean, I do a weekly production call every Monday with everybody who works in the lending business, and they're basically going to get, a half-hour pep talk probably from me every week, consistent themes, just try to be, as engaged as I can. I mean, I have sort of a wacky mind for just individual loan details. So, I'll go to a closer and say, how's it going on 123 Main Street? And like, how do you know about 123 Main Street? I want them to know that the people who are in a leadership position know what they're doing, care about what they're doing, appreciate what they're doing, and what they're doing does to impact how we serve our clients. And again, hopefully they feel that. But it's I'm a lot older than you guys. It takes a lot of energy. It takes a lot of energy to, my organization's, we're in the 50-some employees, so we're a third of the size of Kevin's from a FT perspective. It's a lot of work to keep, as your teams grow, to keep them engaged. And it's not a simple email, go team, we love you. It's person to person, it's a call, it's a conversation, it's you almost, it's a task. It's, I got to make sure I reach out and let so and so know that this is important or this is what they did. And yeah, I mean, it's one of the challenges of scale. I think if you lose that, I don't know that our organizations would be anywhere close to what they currently do or operate.
Yeah, pretty much same with, I try to be as involved in a lot of details as I can. I'm pretty hands-on.
You got a lot more loans than me, Kevin. I don't expect you to memorize 3,500 loans.
I can't remember the number of loans anymore, but the way that I've chosen to do it has evolved over the years. It can't be this. If you're growing and you're changing, which every company is always growing or changing, one way or the other, you evolve. And so I would say right now, because we have a bunch of locations around the country, I try to get out to them as often as I can.
You're going out to them. So you're going out to your tech guys in Texas and Florida and in Boston and from Chicago. Oh, okay.
Yeah. Thursday night, I was in Boston at Yvonne's, coolest nightclub in Boston. I was there with 75 of our top Boston borrowers, clients. And it was awesome, by the way. It was awesome. And our team was there. I was there, and we had a great time. And then the Boston team all went out to dinner afterward. Probably got home at like, maybe 1, 2 in the morning. That was a long day. It was so fun. Wouldn't trade it for the world. Feel like the luckiest job in the world that I have to be able to go do that. So it's really a combination of a couple things. Number one, being present in the office. So my one-on-one with people in the office, just random things can occur. But then number two, being being out in the markets that we're in, listening and talking to people about what we're doing.
I like that. That's something I think all of our audience can take away from this episode is the amount of almost dedication and obsession to that piece of the business. And that's hard because a lot of our listeners, even myself, like at the end of the day, I'm kind of a salesperson myself, right? And I want to get out there and meet clients. I'm not focusing on a lot of these.
Salesperson with a law degree, scary combination.
That's true. I got a law degree. Yeah. Yeah. But at the same time, like I'm concentrating on what moves the needle for the business, and a lot of time I often forget about the personal aspect and the cultural aspect and what's driving, and that's also what's driving the business as well. So it's hard to remember to do all that.
As these companies have gotten bigger, all of us are trying to get, recruit the absolute best people to the team as we possibly can. It's about team building, and because, there's only so much time in the day, right? And we can't, and the team is so much better at so many things than I am. That's without a doubt. Without a doubt.
It's the alignment too. It's like getting that team. It's just that constant. What we can do at a leadership level is everyone aligned on the same 2 or 3 things that matter. And if you can get that with the right people, you can do really amazing things. It's just,
and as simple as it is, what we've tried to do, and I know Greg and I talk about this, is set big goals that are very simple, that everyone knows what they are. Like very big goals that everyone knows, like just out there in the future. Like, what are we trying to achieve?
Kevin's goals keep getting bigger and bigger and bigger, though. Every time I talk to him, they keep getting bigger. So I don't know.
No, we don't set a new one until we hit the last one. So when we hit it, he loves saying that. But I think both of us are in that way where you got to get everyone focused on the same thing.
Right.
What are we focused on? What are we trying to hit? And for us, it's a certain dollar amount per year. That's just the way how do we get to that level? And then once you get about 70, 80% of the way there, you got to throw another one out.
All right. Well, that's all the time we have for this episode. I'm actually, this is one of my favorite episodes so far. So thank you guys for taking the time today. I had a really good time learning and listening to you guys. This has been season 4, one of my favorite episodes so far. So please listen into this one and catch us on the next one. This is Kevin Kim for Lender Lounge signing off. You've been listening to Lender Lounge with Kevin Kim, brought to you by Gerasi LLP, the nation's largest private lending law firm. Gerasi is the leading legal resource for specialty lenders, asset-based lenders, private lenders, and non-bank institutions. Learn more about the firm at gerasilawfirm.com. That's GERACI lawfirm.com. Check out our episode summary to subscribe to our Lender Lounge newsletter and our law firm newsletter, where you can get notified about new episodes and recent content directly from our expert attorneys. In addition, we'd love if you follow Lender Lounge with Kevin Kim on YouTube, your favorite podcast platform, and on LinkedIn, where you can also check out updates from Gerasi LLP. Thanks for listening, and we'll see you next time on Lender Lounge with Kevin Kim. This is Kevin Kim, signing off.